Good afternoon and welcome to NYFP. In midday trade on this Tuesday, the major U.S. stock averages are in the red. The Dow has come off earlier session weakness, but we are seeing the S&P 500 still trade below the 1700 level. Joining me now is Peter Cardillo of Rockwell Global Capital. Peter, good afternoon. Thanks for joining me.
Good to be back.
Well, we are seeing red across the board as well as across the Atlantic. We have to keep in mind that we're seeing light summer volume and thin trading conditions. And there have been some concerns yet again about tapering. And we have also been seeing the Dow being weighed down by some components. So what do you make of today's action?
There's no question that we're in the summer doldrums as far as volume is concerned. You know, yesterday was a typical August day, and today likewise. But, you know, if we really begin to focus on all the economic data, then one more thing, yes, by September, the Fed is probably going to begin to taper. In fact, if you take a look at today's strong trade data, where we saw nearly $9 billion contracting, that's a strong number, and that suggests that the economy in the third quarter is probably going to grow close to 3%. So that would, you know, obviously raise a red flag in terms of tapering. But again, you know, if you look at other factors, and in fact, Fed Lockhart today mentioned that you know, it's about jobs creations, it's about inflation, and neither of those two components have reached the Fed's target as of yet. So I kind of suspect what we're seeing here is the Fed once again beginning to play games, and you know, we have a hawkish Fed member saying one thing, a dovish Fed member saying another thing, and so that keeps the market, you know, basically on its toes. And I think, you know, what we're seeing today is just more of the profit taking that we saw yesterday. We do have a auction in a little while, the 3-year note auction, and obviously with the 10-year note back up above that 265 range, obviously it's not going to be such a strong auction. Demand is probably going to be weaker than normal, and so, you know, that is another factor to take into consideration. But I view today's decline a buying opportunity. I wouldn't be a bit surprised to see if we cut these losses later in the session.
And Peter, you bring up a lot of important points there. So far, we have come off session low, so we'll see where we close. But as you mentioned, the trade deficit narrowed much more than expected, and U.S. exports surged, so that could be good for GDP numbers. And as you mentioned, the Fed speeches will continue to affect sentiment in the market, as it is a light session today and throughout the rest of this week. And it does matter that jobs are being created in the economy. So given that we have one more jobs report before the next Fed rate decision coming out in the middle of September, do you have a figure, or do you expect any kind of pullback in the bond buying program?
No. Again, I say that the earliest will probably be at the end of the year. And then, of course, no question that we'll see tapering begin in the first quarter. So, you know, I'm not changing my opinion on that. And I suspect that we're looking at August employment just as weak, if not weaker, than we saw last month. So we'll probably see continued jobs growth, but it wouldn't surprise me. I haven't, you know, made the final numbers yet, but I would kind of think that based on the jobless claims and a few other factors that we factor in, I would kind of think that we're looking at jobs growth somewhere between 140 and 155,000 in August, which would be consistent with a slow jobs growth market. And so that, you know, would indicate that the Fed stays on hold.
And now that we've covered this side of the Atlantic, I do want to get your take on what we're seeing in the Eurozone. Yesterday and today, we got a slew of data from the Eurozone UK coming in much better than expected for PMI services yesterday. And today, we saw industrial output figures improve, and the second quarter Italian GDP contracted less than expected. So what does this tell you?
Well, it tells me that Europe is probably going to come out of recession in the first quarter of 2014. Of course, you'll have Germany and perhaps maybe France and Great Britain already out of recession, but the rest of the European, and of course some of the northern European countries as well. But as far as Italy, Greece, and Spain, Portugal is concerned, we're probably looking at recession continuing at least into the first quarter of 2014. Now, yeah, the numbers that are coming out certainly show that the worst of the decline in Europe is over. They are in the healing process, but the question is, will there be enough of strength to propel economic growth, let's say, not to propel, but will there be enough economic growth to assist the growth here in the States and in Asia? I think that's still questionable.
Well, Peter, thank you so much for joining me today, and thanks for your take on what we're seeing here in the U.S. as well as the Eurozone.
My pleasure.